Hello, today we will look at Williams R percentage indicator. So we have here on Investopedia a small definition and description about Williams R percentage. It's basically a momentum oscillator, and it will go from a scale of 0 to minus 100, and it will be used to identify overbought and oversold conditions. This will mean it will show us if the price is in an upper part of the trend or in a lower part. I will show you exactly what it shows. And then we have this formula, how it's calculated. So basically it takes the high and the low of the set range, and then it tells you in percentages how high or how low are you in that range. So we'll go to in trading view and we can quickly add the indicator. Just typing Williams percent range, and this is how it looks. So it's an oscillator, and it will go up and down. Here we will have on the top part, we'll have the value of 0, and it will go down to minus 100. Okay, before we show you a few examples, I want to show you exactly what it measures and how it will look. So we have here the standard period is 14, meaning it will measure the last 14 candles. So we will count them 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So basically it will draw a line from here, the highest high, and another line will be the low. This one was the candle. So basically for the last, this is valid only for the last candle, okay? So it measures the 14 candles, it creates a high, it creates a low, and it tells us how far from the high or from the low we are. So here we are very close to the high, so it gives us a percentage of minus 6.31. So 0 is maximum. If we would have closed on this line, this would have been 0. If we would have closed down here, we would have been close to minus 100. And it's doing this for all the candles, for each candle. So basically here we will have only this top and this top. For the next candle, the high and the low will change, and the indicator will show us the percentage of how far on one side or on the other side the closing price is. If you want to trade the Williams R indicator, you have to note that this is using the close of the candle, okay? So if it closes, then you can use the value. If it's still moving, the candle, if it's still moving during the day or during the minutes, depending on what time frame you are trading, it will fluctuate, so you cannot use it as a fixed point. Let me show you now how it looks for each of the candles. We can add here a price range, a price channel, but I would like it without the strategy. No, this is not it. I just want a price channel. Price channel. I'll take the first one. I don't know which one it is. Okay, this is a price channel. We will change the period to be the same with Williams R. So we will do 14 periods. Okay, so this is for our last candle. For the previous candle, you can see the high was a little bit lower. This is why the indicator actually showed a higher value, but our last candle closed a little bit higher. And then it creates for each line, we will see the high and the low. And then the indicator will show us, for example, here, where it shows minus 98, we can see that the low is here and the price is actually touching the low. So it's very, very close. Actually, this one, okay, now this one we can see that the close of the candle is actually 1 point higher than the low. So it's just a little bit higher. That's why we have 90 minus 99%. This is the visual look. So this is the indicator, and it just tells us where the price is. If it's in the higher side, we will see here it's in the higher side. If it's in the lower side of the last 14 candles, we will see that it's in the lower side of the 14 candles. Okay, let me tell you how this can be traded. So the official trading plan for this indicator is, if you want to go long, to wait for the indicator to cross above the -80 and have a close above. So basically on this candle, on this green candle, you can enter on the open, on the close. So this closed, you can open here, you can enter here, go long, and then try to exit somewhere where the price drops below the -20. So it goes above and then it drops. So if you entered here and you went out, let's say here, you will still have some profit. The opposite is to go short when this crosses below the 20, the -20. As you can see in this case, it crossed below and then it went up. So you have to analyze a little bit because this indicator gives a lot of false signals. So in some cases like this, it worked perfectly. Here, wherever you see a small period here that it stays under the -80, this means it will work. So if it stays a little bit, then it moves to the upside and then it moves and stays on the upper part for a longer time. So if you look here, again, it was a short period here that it stayed and then it moved up. Another short period, it moved up, but it did not go all the way up and it started fluctuating a little bit. So why is it that only when it is a short period here it's working? Mainly because if the stock is in an uptrend, it will stay longer in the upper side. If it's in a downtrend, let's find the downtrend portion of S&P. So this one, here we have a downtrend. You will see it here that we have a longer period that it stayed on the downside. And here we had shorter, smaller periods in the upper part. So if you want to use the indicator as it says, just to go long when it crosses the -80. So in this case, basically you go long here, you can put a stop loss under the previous low. So here, then you get stopped out, then it goes again, then it comes again above, you can enter again here, have a stop loss here, and now this time you can see that it went up considerably. So you would have exited somewhere here. So you had quite a good run compared to a small loss. Big win, small loss. You have to simulate quite a lot and see how it works for you. There are some other traders that said when you have this part here, you can enter when it goes above the -20 and hold because it's trying to capture this portion when it's in an uptrend. So you can wait for it to go up and then wait for it to go on the side. Let's find some other examples. When the market is fluctuating like this, you can see it just moves here, here, here. You get a lot of false signals in the same place. So it will not work all the time. You can use a moving average that will show you you can add a moving average. You can add a simple moving average. Just change the input to 200. And this will show you more or less what the market trend is. So if the slope is up, try to go long and try to aim for these smaller portions, and it will help you filter out some of the bad trades. This is more or less what it shows. So you can use also TradingView, and you can play the replay button, and you can go to a specific date. Let's go somewhere back, I don't know, 7th of January. Okay, actually this is a daily. We will go much further back because it will be every day. So let's go to November, and we actually caught a low here. So let's say you caught this low and you are waiting for it to cross above. Now it crossed above, so we buy here. Let's say this is S&P, so it's 5,000, almost $6,000. So let's just buy one here and see how it goes. Our aim is to wait for it to come up here and maybe trade a little bit here and go out before it comes down. So let's go bar by bar. Okay, we were lucky here. We got a good play. Let's wait for a little bit to go up. When you see 1, 2, 3 bars, green bars like this, you can already take some profit if you have more shares. If not, you can maybe close the trade and take this money and put it in the pocket. So now it's starting to turn. This shows minus 21.24. So now would be a good time to sell. So we made $166. Let's move further. Here. So it went below and now it closed above. We can buy again. Waiting for it to go above. It did not go, it came below. Now it crossed below. So normally here we can either wait or we can close and exit again. Our stop loss should be here underneath. So if it crosses below and closes under our stop loss, we should exit the trade. It did not cross, it went up, down. Now it crossed. So let's say we sell here and we are waiting for it to go again up. Even though now it looks like we will stay a little bit longer in this period. It went above. Okay, let's try it again. Let's go long. Let's see. Now it went up. We can close and make some money here, or we can wait for it to go higher. As it's trading here, I think we might catch some. What is it? Is it? So we had New Year's, beginning of the year. Now we are above. We can again. We don't have to wait for it to come down and close. If we made some money, we can take some part of the profit or all of it, or we can wait for it to see if it goes longer or not. Now it closed below, so now we sell. We made some money, so we had a losing trade here, but we had one winning and another winning, so we are positive on the trades. Let's go again. Okay, we had a 66% win rate. What I suggest you do is use this replay mode. For the free version of TradingView, you can do the replay mode on daily chart. So you can go back a few months and you can test it. This is S&P 500. So normally if you go long on S&P 500, which you can see it has mostly it went in an uptrend, you already have better chances to have some profit. This will be swing trades, so it took quite some time for these 3 trades to happen. We started in November, we ended up in January, or in February. You can also use it on 1 minute. You can select a closer date. For the 1 minute chart, you need to have a essential pack, I think, for TradingView. So you need to pay some money, some monthly. It's $15 per month, I think. And it will let you do a simulation on a 1 minute chart. So this is the start of the day, I think. Let's start and let's see where it goes. Oh wait, there's the 1 minute one time. If you are using a daily trading approach, let's go here. Okay, so it's not working at the moment. Doesn't like something. You can test this in the daily, in the 1 minute chart as well. I'm not sure why it's not working at the moment. February. Okay, let's go back now. Let's try again. Something's wrong. Doesn't matter. You can use the daily. to train. And you can use also the 1 minute, but just be careful when you do the 1 minute chart. So for example, you have gaps from one day to another, and because you have 14 periods for this candle, it will calculate the last 14 periods here, and it will not give you accurate details. So my suggestion is to go after minute 14, 15 after the open. So just wait for 14-15 minutes, and then you can trade it, and you can go long in the lower side. As you can see here, it went long. It went a little bit high, but if you did not take your profit, then it went down again, crossed your stop loss. But here you can enter again, and you can see it worked in this part. My suggestion is just try to play with it as much as possible. Play with this replay indicator. Maybe it will work for the 1 minute. I'm not sure why now it's not working. This will save you a lot of time. You also have a strategy tester, and in the indicators, if you find a strategy for Williams R, you can test it. But I think playing on your own will simulate more the real environment, and it will help you a lot to progress. Okay, so you can check it. You can try to enter on the lower side and sell on the higher side. See which periods are better or not. For day trading, I would trade only in the first 1 hour, 1 hour and a half, 2 hours. For the daily, so if you are a swing trader and if you just want to catch some lows, I think this indicator is quite good. And you can also invest on the long term. So if you want to invest in the long term, for example in the S&P 500 or Apple or whatever stock you want, you can just identify easier the lows. So even if here it's a first low and you buy here, you're waiting for the second low, you can buy here again, somewhere, wherever. And then you have a third low, you can buy here. You are holding for a long period, so for sure this will go up. So it will be easier to make some money. It's definitely better buying this part than buying in this part. So whenever you see the market going up, here, this indicator will help you refrain yourself from buying in this side and just waiting for it to drop in this area where you can invest. So instead of waiting for S&P for I don't know how long to come back down, you can have other indicators that made the low in other periods, so you can search for more stocks and have a watch list. If you're doing swing trading or investing, just try to get stocks from S&P 500. This will give you a higher chance to go long. So the probability for these stocks is to go long, so it makes sense for you to just buy in these areas. You can look at it here. If you bought here, you bought here, you bought here, you bought here, it went up, you sell anywhere in this area, even here, you are already in profit. Here you have more money. So you can see it's working quite well. If you are trading just the indicator, it helps you a lot to stay more focused on what you are doing than to look at the money and, I don't know, get affected emotionally and do mistakes. So just try to trade the indicator. Just look at the indicator where it is and you can take decisions, enter, exit. Don't worry if you lose 1 or 2 trades, it doesn't matter. You can win more on the other trades. Okay, thanks for watching. If you find this helpful, I will try to make other videos with other indicators. Have a good day and see you soon.